Hi guys, it's Adam here from dodjit.com. What I want to do in this video, it's going to be a short video compared to the one that we posted over the weekend. We just want to show you a few points that we're looking at the moment, some critical trading levels on the stock market and on gold. Now, before we get started, I just want to answer a few questions. We got a few questions via email this week, and one of the questions was if we can start to publish more videos on the website. Now, basically what we like to do is we like to give a broader perspective of the market, and that we can normally do after 1 or 2 trading days. That's the reason why we don't publish more videos on the website. As you've all noticed, in all the videos we try to give a larger analysis of the market, try to use a little bit of intermarket analysis on the videos, and we can normally do that once we've seen a couple of days of trading in the market and we start to get output and economic data that's coming out. Okay, and that's just one of our viewers' questions. Now, the first chart that I brought up is the SPY. It's a spider. It tracks the S&P 500. You can see it right here on the left-hand side of the screen. Now, by the way, also the charts that I'm using are stockcharts.com. Alright, so let's get started. As I stated, this is the S&P 500. It's a spider chart. Basically, what's been going on is like this. We broke down this support level right around here. We completely plummeted down to the 74.59 area. Now, at the moment, if we look on all the indices, and I'm not just talking about the S&P 500, I'm talking about the FTSE, I'm talking about the DAX, all the major indices, they're all trading around these critical levels. Now on Tuesday we received this very, very bearish candlestick, but the close of the candlestick, even though it did break our prior lows slightly, especially the S&P 500, if we look at the index itself, we're going to see that it did break slightly our prior lows. It didn't close below them, and what happened was that we are still now trading around our prior lows. We can see this level is a level that we've been stating on the videos for quite a while. This is a level that we've got to be looking at. Now, the reason behind all this selling pressure was basically AIG. The massive insurer came out to the government. They said that they're going to probably need more fundings. At the moment, the government has stakes in the company of roughly around 80%, and they're thinking of increasing their holdings in the company, so that wasn't good. The whole of the financial sector really started to drop, but in particularly in the insuring industry, insurers, insurance, stuff like that. Now, yesterday, funnily enough, the markets rallied. They rallied as the Fed, as the government, they came out, they said that they're probably not going to nationalize defaulting banks, and the markets really took that to the upside. Now, the reason behind that is because basically when the government, they start to purchase or start to buy out stockholders, so that's not a good thing. Investors, they start to still sell their stocks. They're trying to at least get the higher price for the stocks, and then what we do is we get this big massive intraday sell-off because of fears that the government is going to just take over all their assets. So that's basically what happened on Tuesday. On Wednesday we bounced back when they said that they're probably not going to take holdings in the banks. Now, funny enough, what we did receive yesterday was this bullish harmony pattern. Now, this pattern basically normally signals a type of reversal. Now, I'm not saying that we're going to receive a massive reversal. We could receive a reversal up until this resistance level, which was acting as support. I'm talking about the 80 level. At the moment, futures in the US, we're before the US Open. Futures are not looking that bright. So we could be ranging around this area for a little bit. We're just going to have to keep an eye out on that. The chart that I want to bring up is the US dollar index. You can see it right here on the left hand side of the screen. Now, if you're a forex trader, this is also a chart that you're going to want to be looking at. You want to be referring to this chart in order to see basically what the dollar's been doing against a basket of currencies. Now, already for a while we've been stating that we're here at dodjit that we think we're going to still remain in consolidation. I'm talking about this consolidation area roughly around here. And let's just bring up resistance and support level. So this is our area that we're looking at the moment. We're looking at, it's quite a wide range, but it is a range. Now, if we look carefully also, we've got this uptrend thing going right around here. We haven't broken it yet. We haven't climbed higher. The only currency that is really having an impact on the currency market and showing us significant moves is the dollar against the Japanese yen, and that's because of the weak economy in Japan at the moment. So this is something that we're also looking at. Now, obviously, if the S&P 500, if support is going to break, if the markets are going to collapse, I'm talking about the stock markets, so then we could receive a higher dollar, especially if people have been fleeing to the dollar recently. We could also receive higher gold levels. And I just want to flip over for a second to the gold chart. That's the last chart. So this is the last chart. It's a gold chart. You can see it right here on the left hand side of the screen. Now, basically what's been happening, and we actually gave a signal about this a couple of weeks ago regarding gold. We did a whole analysis about gold and why we expect it to continue higher, and that we've started a new wave if we're analysing the charts via Elliott waves. Basically, it's been acting well. It's continued higher. We've touched now the 1,000 mark. We even touched it at 1,770. The thing is now, 1,000, it's a type of psychological level, so I don't expect it to break it immediately. I think we've got to take this level into consideration. Also, if we look further back on the charts, we can see that gold touched 1,000 in the past, but it couldn't really break it. It climbed slightly higher, it reached 1,030, something like that, but it couldn't really break it. So, you know, we've got this level around here. It's a psychological level. It's going to be hard to break. If we look also and we start to draw a few trend lines, we've got this trend line that collides exactly with the 1,000 level. We've got this trend line coming up here. So, you know, basically what we're going to have to do is we're going to just have to wait to see what's going to happen with stocks. We did receive a bullish day yesterday. Doesn't seem like we're receiving a follow through. We're going to have to keep an eye out on all the markets to see what happens. And regarding gold, obviously, if stocks are going to crash, so then most probably people are going to continue to flee to gold. So that's it. My name is Adam from dodjit.com.